How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on Euro versus US dollar, EU. As we see, we just broke that IPTA look back 20-day high. So we broke buy side liquidity pool right above this swing high. That's the highest high we had in the last 20 days from the start of August 1st. We just rated that. We could potentially be seeing a Larry Williams smash candle. So this candle closes above several highs, also is in a premium, and took out buy side liquidity pool. If price returns back down to this low, that might be a triggering start for a sell signal, and we might see price continue to sell down, possibly. However, with our bullish trend formula, right now it's still in play. We have a swing high broken, and there might be a higher swing low that forms inside this busy buy side imbalance, sell side inefficiency. The market was inefficient in covering the sell side while running up very fast, so it's only one-sided. We'll see if price tries to cover that in and then push back higher to take out potentially this swing high that's going to form in the next 21 minutes. So this daily candle is about to finish closing. It's currently now 4:38 p.m. here in New York. So if we see something along the lines like this, comes back up and continues that bullish trend. Or there could be signs that dollar may gain strength again, and all the other fiat currencies like EU, GU, AU, and NU may depreciate in price going into August. We're still going to wait it out. I want to be very patient because last month I was rushing and trying to anticipate a turning point. Like I'm telling you guys now, a turning point could be this sell signal here because of this candle. Price could possibly come down and continue to give us lower lows and lower swing highs. However, I could be incorrect, and being aggressive on that, I could be stuck in still a bullish trend. So I want more confirmation. So I'm going to allow price to continue to do what it's got to do and see what we get going into this week. Looking at the DXY, same thing we talked about last episode. Price may pull back and run into this city, sell side imbalance, buy side inefficiency, inefficient on the buy side. It was selling so fast. So price may want to correct that, fill in that inefficiency, and then continue going lower, taking out this swing low that it's about to finish forming in 2 hours and 20 minutes. Or this is a buy signal. If price gets back to this candle's high, it should want to shoot dynamically, create higher swing highs and higher swing lows, push back above the monthly opening price. If this is going to be a turning point, right, you could be aggressive and you want to take that buy signal and you think fundamentals may come back into the dollar, possibly. Now, what I'm looking at right now, I see the bond yields is currently doing the same thing the DXY is doing. So take a look at what the DXY looks like here. Once you take a look at the 2-year, look at how the 2-year looks. Looks just like what? The dollar. And it looks like it created a turning point here. However, this is not the smash candle because this candle closes up here. It would have to be a down close candle and price getting back to the high. This is an up close candle, so it doesn't look technically like a buy signal. But the fact that price is crossing over here and creating a swing low, the fact that this swing low is forming in general, this could be a bottom, right? The bottom of a new leg higher. Take a look at the 5-year. Same thing is happening here. Same thing is happening on the 10-year. Very dynamic today for the 10-year. And the same thing here happening on the 30-year too. And this candle actually closes below all these lows as well, but it's an up close candle. So this is my first time actually looking at it this way. Normally I'm looking for a down close candle below several lows, but this candle closes and it's still up, but it's still closing below these lows. So this technically, I guess, is a smash candle, and you can see the 30-year is looking to push higher. We'll see if this continues to hold its momentum or this quick turning point on sellers and create a new bottom and possibly get another higher bottom, a higher top, and a higher bottom. So higher swing high, higher swing lows. That's basically a bullish trend. So we're looking out for those signs. Let's take a look at some intermarket analysis. We'll take a look at GU. See what GU has been doing. Is it selling off or is it buying? It's actually going lower. So it looks like it's continuing that bullish trend formula. So we just recently broke another swing low, which should form after breaking a swing low. We should see price want to continue to print a lower swing high. So we might get a pullback above certain highs, or it might be this week or next week where we were going to get some type of lower swing high formation. There's going to be a daily candle on the left then a daily candle in the middle that's higher than the one on the left, and then a daily candle that's lower on the right, making a high point here. So to take 3 bars, one, right, it would look like this if I had to draw it out. Right, we got one candle here, another candle that's a little higher, and a candle that's lower. That would be the lower swing high. So we would have to wait for that formation to want to try and catch that swing point, because generally those swing highs and swing lows are where the commercials are repositioning their net longs and net shorts. So anytime you see that new swing point, pay attention to it, because that could be an opportunity for you as a trader to get in sync or in trend with the market right there during that swing point. You can be aggressive, like I said, and try to anticipate when that swing point is going to form. But if you are someone that is a little less experienced and you don't want to take on more risks, just wait for those 3 days to form in that sequence. Let's take a look at AU. AU recently broke a swing low. That's the most recent one we broke. We would want to see and wait if we're going to get a lower swing high. So that next daily candle, this candle is going to finish in 60 minutes. We don't want to see that next daily candle open and run and take out this high per se. Because if we're anticipating that lower swing high to form, we want that candle to open, probably run up, fail to break that high, and then finish lower, just not breaking that high at all. So then that would mean this would be a lower swing high formation here, lower than this one here as well. And we continue that bearish trend. It could also create a lower swing high and then have a false break. It still can take out this swing high here and then go lower. I am cautious about this to this liquidity void, this last up close day, and this next up close day after the sell off here. Price may want to run into that. I may want to fill this in. So keep that in mind as well. What else do we have? NU recently broke a swing low and quickly repriced after that, looking to go higher. Could we be getting a lower swing high here? Because the candle on the left is lower and the candle on the right is lower. This candle hasn't broke this high yet, so this could be the lower swing high. You can also see it fills in some of this liquidity void, this last up close candle to this last up close candle. So it filled in partially some of that, probably pretty close to 50% of that liquidity void, and may look to go lower and want to take out maybe this swing low that it's forming here. So that's something we could keep in mind. What else we didn't look at? We looked at all those. Let's take a look at some inversely correlated pairs. So let's take a look at UCAD. UCAD recently broke a swing low. Now this could be signs of bearish momentum or it's a false break, right? Not trying to persuade you to a certain narrative, but just things that come to mind when I think about it. We do have this liquidity void too. You can see this last down close candle before this last down close candle. Look at all those up days. Price filled in a good portion of that. It could want to go higher. Right? This could be substantial enough for it to fill in that inefficiency and want to go higher now. This could be a false break. And price is going to continue going higher, maybe taking out this swing high that it formed there. It is well below the August opening price. So if this is going to be a bullish month, buying down here right now would be ideal because it's in an oversold condition. You want to buy cheaper as the buyer. Now, if this is going to continue being a bearish trend, I would wait for a lower swing high to form and wait to see if price will continue to break down after that lower swing high. Let's take a look at something else. What do we have up here? USWSD. See, USWSD is still selling off from that last month too, from July. Let's get rid of this. We're well below August's opening price, which is here. This is a buy signal right here. This is a down close candle with a close below many lows and in an oversold condition for the month as well. And most likely probably ran out some type of sell side. As you can see, yes, it has. Some sell side liquidity pool here. Sell side here below that swing low as well. So it rated orders there. Anybody that was long has a stop loss, hypothetically, below that low. So price could be looking to turn around and maybe fill in this liquidity void that's currently forming. We haven't had an up close candle in the last couple of days. So 1, 2, 3, 4, 5, almost basically a week of all down days. Now we know there's definitely going to be some type of correction, whether it's 1 or 2 days, 3 days. who knows? Or this correction turns into from a retracement to a reversal, and this would be where the buy signal would be here. So we'll just keep this on the chart. Let's say this is the buy signal, right? The smash candle theory. This is by Larry Williams. So we'll see in the near future if price gets back to this high, if it explodes through it and stays above it and doesn't get back down to this candle's low here. Once it crosses that line, I don't want to see it get back down to this candle's low. So we'll take a look at that a little later. Now, let's look at gold. Take it a step further. Gold looks to be in a sell signal. This is the last up close candle that closes above highs. It's also in a premium, right? It's all above highs. Took out buy side liquidity pool here. Price got back down to this candle's low. So far, it looks like it's holding its stance, so want to go lower. So we'll see if this continues to go lower. We want to see it break a swing low. It may create a swing low here and break that, and then we'll see signs. You want to see signs. Okay, once it breaks this swing low, are we going to get a lower swing high compared to this swing high here? So we have that continuation, or that idea that momentum is bearish. It's confirmed because we get a lower swing high. We take the educated guess that commercials are going short. Maybe we get in short, take that signal and follow through with that idea and find shorts of gold. So we'll see what's going on with all the market. To bring it back home again, right now I would wait. I want to see if price is going to come down and create a higher swing low. So a swing low that's higher than this one, somewhere in this range of this PD array, and if it's going to push to go back higher, or if it disrespects that swing low and continues to break lower and prints a lower swing high. Hopefully you found this insightful. Peace.